Hi, and thank you for joining us on our journey on demystifying what tax governance means for your business. My name is Carney. I'm a senior manager in our Brisbane office and specialize in all things indirect taxes. In this segment, we want to focus on the top 5 things to know about the GST Analytical Tool, or the GAT. Here to help me navigate this topic, I'm joined by RSM's National Head of Indirect Tax, Sam Mohammad. Sam, to kick us off, what are the first important things to know about the GAT?
Yeah, thanks, Louis. Maybe just to take a step back, what is the GAT? The GAT is the most important tool used by the ATO as part of its investigation of the justified trust pillar relating to the alignment between GST and accounting outcomes. The tool uses a standard method statement to identify and understand variances between accounting figures reported in the audited financial statements and the GST that's reported in the business activity statements, the BASs. In theory, those two numbers should be broadly the same. The purpose of the GAT is to understand the reasons for any differences arising between the accounting figures and the GST figures, and where available, to verify them with objective evidence. In the ATO's Top 100 and Top 1000 audit findings reports issued in September 2024, the ATO observed that using the GAT can assist in identifying GST reporting errors. I guess the first important thing to deal with is whether the GAT is compulsory or not. This is the first question addressed in the ATO's GST GAT frequently asked questions publication, and confirms that the GAT is required for top 100 participants other than those that predominantly make input tax suppliers, and is used for most taxpayers in the top 1000 group that predominantly make taxable or GST-free suppliers. So in short, for the last 2 to 3 years, undertaking a GAT analysis has been a permanent feature as part of the ATO's combined assurance reviews for top 100 and top 1000 participants that are not in the financial services sector. This leads me into the next important thing to note about the GAT, and that is that the ATO considers that undertaking the GAT annually is best practice and part of good tax governance. There's an expectation in relation to Management Level Control 7, which is around procedures to explain significant differences that a taxpayer has a process in place to explain BAS reporting of GST payable and GST receivable compared to the business outcomes, and to explain variances in comparison to financial statements. If a taxpayer is not able to undertake the GAT, the expectation is that they would undertake a comparable book-to-tax comparison, for example, periodically reconciling to the management accounts. It's worth noting that for those taxpayers who will be completing the supplementary GST return, a large portion of that return is dedicated to explaining the results of the most recent GAT undertaken, or if it was not undertaken, why it was not undertaken. Louis, what's the third most important thing to note about the GAT?
Thanks, Sam. It is important to note that the GAT is not a reconciliation tool, but a comparison tool. What I mean is that the ATO's expectation is not to have a perfect dollar-for-dollar reconciliation between the annualized BAS and the financial statement. The ATO accepts that there are fundamental differences between certain accounting standards relating to revenue recognition and the attribution rules for GST purposes. Therefore, at the end of the day, it's equally important, if not more important, to understand the reasons for any underlying reconciling differences and being able to support that with objective evidence. It's this explanation that drives the ATO ratings, and not so much the initial divergence between the income statement and the BAS disclosures. Sam, maybe moving on to tips and tricks relating to undertaking a GAT. In your experience, what are some of the things you have seen that could benefit our audience?
The ATO's expectation is that any GST understatements are flagged with the ATO on an ongoing basis, and not just when an ATO review is called or is already underway. Risks or understatements identified when undertaking the GAT are best quantified as soon as possible and disclosed through a voluntary disclosure. In our experience, the ATO looks favourably on periodic voluntary disclosures rather than voluntary disclosures only being lodged in the course of an audit or review. Lastly, I have a couple of suggestions to be aware of when undertaking the GAT that might be useful to narrow down or explain unreconciled differences. So firstly, transposition errors, or understanding whether an adjustment should increase or decrease the GST impact. You might have some offsetting in certain accounts. Discounts and rebates posted outside of the review period, stock purchases or gains and losses on capital assets and other balance sheet movements. There might be some barter transactions and manual journal entries.
Hopefully our recap of the 5 key things to bear in mind in relation to the GST Analytical Tool or GAT will help you integrate this into your tax processes and control, and has demystified what it means for your business. We welcome any comments and feedback you might have. Until next time, thank you.
Thank you.